Today, I'm here with Gary Black, a crucial voice in the Tesla Twitter community. He runs an actively managed ETF called the Future Fund. And prior to Tesla's earnings, he cut his position from around 10% down to 6% on concerns of valuations and how Wall Street's been lowering their estimates. So I'm Bradford Ferguson. I am a financial advisor. This is not financial advice. This is not a recommendation to buy Future Fund or to not buy it. Gary Black, go ahead, say hello.
Hey, Brad, but you should buy it. It's a good fund. We've got good performance.
Yeah, this is not an endorsement. So tell me, going into earnings, you trimmed Tesla. Tell me about why you did that.
So it was after the price cut. So we only had a day to react. And you know, what I didn't like, I didn't expect them to cut price again a day before earnings. But when you think about all the things that were happening, they sent out a consensus sheet. They took the key metric off, which is gross margins ex reg credits. They took it off. They didn't want to show it. Then they cut the price the night before earnings. And then Elon's just been so into this whole affordability narrative, which, that's great if you have a $25,000 EV ready to go, but it's probably a year away. So for all those reasons, I'm thinking to myself, okay, this doesn't sound like a good setup. And then, he had this thing where, he suddenly followed a whole bunch of YouTubers, which is fine. I don't care if he follows me or not. I mean, really don't care. But, all these YouTubers came in, and to me, it's like, okay, what is he lining up support for? What is something that's going to be not so great? So it just kind of got my thinking going that this may not be a great quarter. And then when I saw the numbers and I saw that they missed on gross margin, I was like, okay, the stock's going to go down at least 7-8% tomorrow. So, going into it, we just felt there was a lot of risk in the stock. And look, we believe that the valuation is still pretty good. So we kept it at 6%. It's still, a large position. But when I look at growth stocks and I see even say 30% volume growth, selling it, even if you assume the estimate cut 33 times next year's earnings, it's a cheap stock, PEG close to 1. So we wanted to keep the position out there, but we didn't want to be in the way of what we thought would be analysts taking estimates down. And, that's kind of what's happened.
So you are pragmatic and balanced. I try to be as well. Some Tesla optimists or, maximalists, want to be all in. That's okay to be all in, but we want to do things with our eyes wide open, know what the risks are in the interim, know how people perceive things. Also coming into this earnings call, and we'll get into the earnings call in a second, you and I have been on the side that maybe Tesla should advertise. Right. And I'll give my case first, okay, and talk about how I think they should do it. But I have a Model Y. And I give people a lot of beta test drives to show them what it can do now. And the question I least look forward to when I give a drive is, how much does it cost? And it used to be, well, it starts at $62,000. That's the lowest one they have right now. But now it's much more affordable. I think the price is down, after credits down to below 45,000. Right. It's cheaper now than a used BMW X5, which has the same cargo space. It has a different trim. Electronics aren't as good, and it sits higher on the road, but that's about it. So it's kind of shocking to me that there's just not that awareness out there. I think there needs to be awareness. And I think there's a low-hanging fruit that Tesla could test, which is to do internet marketing where you can track it. You can track every dollar spent. You can track where the clicks went and exactly what happened. And certainly that type of marketing doesn't scale to like $1 billion a year, or maybe not even to 100 million a year. But there's low-hanging fruit. For example, if someone visits Tesla's website, they could retarget those people and just make them more aware of the advantages that Tesla has, the safety, all that. What do you think about that? What do you think about advertising in general, Gary?
Okay, well, you know, I'm pretty pro advertising, and, you know, just to put it in context, the price cut they took Monday night is going to cost about $1 billion. If they were to try a 50 million, and I don't think you're going to get much volume from it. That's just my own view. If you were to try a $50 million ad campaign, and we could talk about, you know, how I would do it.
Let's hear it.
Yeah, you would get some number of incremental users. So there's two types of advertising that I think we could try and see which one works better. One is what I call category advertising, trying to convince somebody who's driving, you know, the BMW to convert into an EV. So then it doesn't matter, it's a Tesla, just overall accelerate the transition to EVs.
Yeah.
I call that category advertising. And the second is, you know, literally talking about why Teslas are better than other EVs. And I would favor the first. As the market leader in the US, they still own 60% of the EV share. And I know they don't like to measure it that way. They're going to get their fair share of 60% of somebody they convert. And there's a good chance if they're sponsoring the advertising, they're going to focus on their own products, they get even more than that. And so think about all the things that you know about EVs. You got lower operating cost than a traditional ICE car. That's point one. Point two, it's just so much easier to, at home or go to a charger, to charge your vehicle rather than go to a smelly, stinky, dirty gas station and fill up, which everybody hates doing. Three, the technology, we'll call it, you know, near autonomy. You don't get that with gas-powered cars. You do get that with EVs. Resale value is much higher as a percentage of the purchase price with EVs, and you're helping the environment. So I have all these things that I can, you know, through an ad agency. I'm not an ad guy. You're not an ad guy. You could get out in front of it, highlight what we call product as hero, show the Tesla, and convince people that now is the time. I think the single biggest thing beside cost, there is this view that the cost is too high of EVs. That may or may not be true, but I think it's fear of running out of charge. Yeah. And so somebody has to go out there and talk about why that's not going to happen. You know, Tesla with 20,000 EV ports in the United States, you know, 45,000 worldwide, they can make the best case of why you won't run out of charge. And as you and I know, if you install a charger in your garage, you know, charging your car is no different than charging your iPhone now. You know, you just plug it in. And so I think if they could show people that through advertising, you would convince people to accelerate this adoption. A lot of people they're interested in EVs. I think they're just afraid. They're afraid because they don't know how easy it is to charge. And they do worry that the cost, at least on paper, looks higher. But if you could show that the cost of operating a Model Y is no different than, say, a Toyota Corolla, I think that would go a long way. But you got to do that through advertising. That's sometimes hard to show.
Yeah. So
I'm a big believer in that. The second type of advertising, which I think would come second, would be once you've got more EV adoption. EV adoption in the US is still only about 7%, and it's expected to double with the new EV credit, you know, the $7,500 credit in place. But I think if you could convince people why a Tesla, you know, rather than an ID4 or a Mach-E, and it's, you know, it's five things. It's the range is better, the performance, meaning the acceleration is better.
It's just more instant both ways. Yeah.
Right. The technology is better. If you've driven a Mach-E, the technology is buggy. You drive a Mercedes, the technology even buggier. The safety profile is better. And then there's just more charging stations. So those five things you would emphasize, and you'd show the car, you'd show it accelerating, you do all the things that you do with a normal car ad. But I think if they did both those type ads, so one is to expand the category and one is to differentiate Tesla versus other EVs, they're going to get some incremental buyers. And I can't tell you what it is. I was down in Miami with a bunch of advertising people. You know, Elon got interviewed by Linda Yaccarino, who's the head of NBC Universal. I said, you know, if you could just convince him there's a way to prove ROI. I said, that's great, Gary. We could, but they've never advertised. So we can't make up a number. We don't know what the incremental ROI is on advertising, but we know it works. We could show them for other car companies what happens when you advertise. So I get the sense, talking to Linda and talking to a lot of people at that conference I was at, there was 800 advertisers there and all the big names. Tesla will advertise. It's just a matter of when. And I think they want to look, they don't want to go back on it. I mean, Elon, for some reason, thinks that it almost looks like it's inferior to not let the product speak for itself. He's got this idea that it's almost like he's begging people. But I mean, you look at what Apple's done. Apple has a great product. but they spend a ton on advertising, and they work together to grow their sales. And I think if Tesla could start it and try it, to your point, measure it, do it on social media, we could actually very pinpoint target specific users, who have certain demographics that are most prone or over indexed to buying an EV. To
Yeah.
me, you could try it. And if you try it, you're going to find it. And I think Elon would, just like he's fallen in love with Twitter. I mean, it's clear he loves Twitter now. I think he would fall in love with the whole idea of, coming up with different ad campaigns and being clever. And, Elon would like that stuff, I would think, if he got into it. So I think it's just a matter of time, and it's a matter of, coming up with the right content. And do you want to go after the whole category, the whole EV category, or do you want to just differentiate Tesla versus other EVs? I would do the former.
I think what we're talking about is that they at least test it.
See if it works.
Have they made an informed decision? And they don't even have to do 50 million. You could do a much smaller amount and track every dollar and see what happens. And but like a broader awareness campaign, you may not be able to track as well, but that's fine. Like, let's just have it be an informed decision. And I'll just say this, I own 2 Teslas. I've never run out of charge. I haven't owned as long as many, but September 2019 is when I got my first. I'm in Indiana. I've done a road trip all the way to New Hampshire. I've done road trips down to South Carolina and Florida. I never ran out of charge. It takes a little longer on the long road trips, but that's maybe 1 or 2% of my driving days. And I never have to worry about going to a gas station. It's always fully charged. And if there's no power in my neighborhood, my furnace or my air conditioning isn't going to work, but I can go into my Tesla and make it through the night or whatever, and I can drive it around. Anyways, we'll move on from this, Gary. I want to talk about the earnings call. I'm not quite as Wall Street as you are, and it's okay. You're Wall Street or institutional thinking, but you also, I think you allow things to break rules, and you and I are converted value investors. So it's very unusual that we own Tesla. We own Tesla. We bought it when we did. So we'll get into the converted value thing later. But me listening to the call, I was not very encouraged by it.
Why were you not encouraged? I could tell you why, but I want to hear why you're more bullish than me.
There were multiple things. So Elon again intimating that he would sell cars at for zero profit just to get more cars out for this eventual robo-taxi. I just knew that Wall Street and the public would hate that because they don't understand it like we do. It's too far in the future, and it sounds like a sacrifice. And when Elon talked about this concept in December, he was talking about it in the context of a deep recession. I don't think we're going to head into a deep recession. Things are certainly shaky. We're worried about the Fed and the banking system, but I think things will be okay. So for him to again bring this up, some people are saying, well, he's saying Tesla can do it, so they're in a position of strength compared to other automakers. But I knew people would hate it right away. Do you think that's mainly what the public is reacting to today, or do you think they're more reacting to the margins in Q1 or whatever?
Well, let's be truthful with each other. They missed. Okay. So they delivered a gross margin ex-reg credits of 19. The street was looking for about 21. And even on operating margin, which is their new metric that they want to confuse everybody by, they delivered 11.4. The street was at 12.3. And the earnings number was low quality. I mean, they hit the 85 cents, but 5 cents of it was from lower R&D and a lower tax rate. And you don't have enough information to say, okay, are those going to be recurring? But to me, I look for quality of earnings, and they had very high reg credits relative to the past. So they really shouldn't have even done 85 cents. So that's the first thing. I think you're right, though. So the stock was down about maybe 1% or 2% after the numbers came out, and then the conference call started. And what became very clear.
Let me challenge a spot
Yeah,
there before we
yeah,
talk about conference call. So, Zach said that half of the gross margin decline was to one-time items. I don't know if you dug into this yet. I mean, we're both like extremely fresh to this information. We'll find out more when the 10Q comes out. But what did you think about that claim that, half of the profit decline was because of that one-time items?
I take everything that Zach and Elon say with a grain of salt. Even when they say things like we're growing volumes at 50%, they're not. They're growing volumes at 35%. And then they say, well, if you start with when we first said this and you look at it cumulatively, it's 50%. But that's not the way investors think. They think about it current quarter over a year ago, 36%. That's not 50%. So when Zach, management has lost a lot of credibility by saying things that you later find out are not true. And I'm not calling them liars. That's not what I'm saying. I'm just saying, don't stretch the truth and exaggerate claims, because people are smart enough to figure it out. So to your point, the 10Q will be out today or tomorrow, and we can track and see if the margin being 19 was because of one-time items. What I got from that was, well, when we first said 19, we had a stronger economic environment. I heard him say that too. And things have changed since then. I don't think that's necessarily true. I think, the economy hasn't gotten any worse since the fourth quarter conference call. In fact, I think it's probably gotten a little better. So to blame it on the economy, which is, it sounded like he was partly blaming it on that. And that's why his guidance of 20 wasn't accurate.
Maybe they're blaming it on confidence in the economy though.
Maybe, but the first quarter GDP is going to be up 2, fourth quarter was up 2.9. So, maybe you're right. Maybe the banking crisis, which happened at the end of March, caused some people to say, hey, maybe I shouldn't buy a car. Maybe, but look at LVS today. LVS is up, 4 or 5%. People are going to Vegas. People are going to Macau. People are going to Airbnbs. People are traveling. They're still buying luxury goods. So I don't buy the economy is hurting their business narrative. It could. And I agree with Elon that the Fed should stop raising rates now, because they're going to break something. But
rates are definitely hurting for sure.
Well, but again, I'll challenge you on that. If you look at a 5% loan rate, which is where we were a year ago, car loan rate versus 8% on a $50,000 car, you know what the difference in payments is?
Is it like 120 a month or
70 a month? So instead of being 930, it's 10, it's $1,000 a month.
So it's only 10%, 7% higher.
It's not a big number. I mean, I don't think that's a big number. So I'm not buying it. I'm not buying it's the economy, because I see all these other companies. And look, as an analyst, when I start listening to a CEO say, well, it's the economy that's causing our business to be weak or not hit our targets or not hit our guidance, I just shake my head, because that's not what you hear other CEOs saying. They do warn that if the Fed keeps raising rates, that's a mistake. And I agree 100% with that position. But I don't think that was a reason why the first quarter numbers came in light. I mean, after all that massive discounting, they only got 4% volume growth sequentially versus fourth quarter. I don't think it's that. I think it's just back to the advertising narrative.
Let's go to the earnings call instead of advertising.
Okay. But I'm just gonna say something. Model Y is going to be the best-selling car in the world this year. And there is a ubiquity factor that when your neighbor is driving the same car you are, you may not want it as much. I don't know. So back to the earnings call, to your point, I just felt that they weren't forthcoming. And when they start saying things like, well, we're really growing volumes at 50%, even though we only put up a 36% number, or they say things like Zach said that, the margin miss was half of it was one-time items, which he didn't go into, and we're going to have to pull out the Q to figure out. I just don't like stuff like that as an analyst. It just, you lose my credibility when you say stuff like that you can't back up right on the call that I could check right there. So we'll see. So I didn't really think too much of it at the time. I just knew that what I took away from it was when Elon said, look, we could cut our profits to zero. We could, and we could make it up on autonomy. And to your point, nobody believes that. Nobody believes that autonomy is going to be solved, at level 4, level 5 anytime soon. It might be a couple of years from now. And if and when it comes, there are going to be others who also have autonomy. So I thought the best question was, well, if you cut the price on your cars, why don't you cut the price on FSD? And
Mhm.
he was like, no, we're not going to do that because that's where all the value is. And to
Mhm.
me, that would be a way you could get more volume, is you could package it together better and maybe not charge as much for
Yeah.
FSD. $299 a month is a lot. 12,000 is a lot. You know, relative to the price. Talk about car payments. Throw 12,000 onto a $50,000 car. You know, you're adding 25% to your car payment. You know, and if you lease it at $299, that's a huge number.
Mhm. Let's talk about why he thinks that long-term value is in the software. So when someone owns FSD on their car, it stays with the car as long as the owner does.
Right.
And what can happen is when the ownership changes, Tesla can take that off. Maybe not a private sale from one consumer to another, but when the car gets sold to a dealership, Tesla can take that off, and then they decide, okay, they'll offer a certain number of cars without it and a certain number with, and they'll just add it back on. So it, that costs them almost nothing to do that.
Yep. Yep.
So that's where the value is. They can sell it multiple times during the 10 to 20 year life of that car. That's, I think, what has Elon excited, for one, but also it's what Tesla may make from a per mile basis if robo taxis ever come, where they might charge 20-30% per mile. So that's kind of like the promise, the carrot that's like hanging out there, way out there in the future. But Wall Street doesn't like that because it's ephemeral. It's more than a year out. What else from the call did you not like, or what from the call did you like?
Yeah, I don't think Wall Street, everybody says they're so short term. I don't agree with that. We look at everything on a discounted cash flow basis, present value it. So I think we're smart enough to say, here's what happens 24, 25, 26, 27, 28, 29, 20, and 30. My view has always been with FSD and Robotaxi is, I don't know if they'll ever get there. They may, okay? It's not that I don't like it or I think it's too out there. I just don't know if it's going to happen anytime soon.
Right.
And B, I think others are going to be there with them. I don't think Tesla's going to be unique in having, level 4 robo-taxi type products. I just don't believe that. I think they've made some improvements now with the new hardware because they've got more sensors. They've got the high def radar. So, it's a better product than it was, but I still don't believe they're going to be the only ones there. When you look at all the money that everybody else is spending on, autonomy, I mean, they're spending a lot more on the hardware than Tesla is. So I'm just not buying it that they're going to be the only game in town. I guess that's what I'm saying. What else didn't I like about the call? They kind of stuck to, even though they just took prices down again, both in China and the US, they stuck with 1.8 million as their volume number. So are you really not getting any incremental volume from cutting price by $1 billion? Why would you do it? They didn't address the big elephant in the room, which is, why wouldn't you spend some money on advertising it? If the volumes are not meeting your expectations, and let's go back to, why aren't they meeting their expectations? Okay, so why are they cutting price? The volumes are growing at 35%. They grew at 36%. The production is growing at 45%. I think it was 44 year over year. So if you keep producing that much more than you're actually able to sell, and you got Berlin and Austin ramping up even more as we speak, okay?
Yeah.
You're going to have an imbalance. And that's why you've seen order backlogs drop, lead times drop, inventories rising, because they're not selling everything they make. And I said this on CNBC last night. It's not like Elon's competing against the rest of the industry. He's competing against himself. He's competing against this 50% production growth target that he's imposed. And it's going to get there because Berlin and Austin are going to keep ramping up. Then he's going to build Mexico and he's going to build another factory. But if the intrinsic growth rate is only 35%, what do you do with all those extra cars? You wind up discounting them. And there's so many problems with discounting them because you're training people to wait for a price decline. So think about it, the media is saying 6 price declines since the beginning of the year. You and I know there hasn't been 6 price declines. There's only been 2. But when people read that, they think there's been 6 price declines and they say, okay, I might as well just wait, especially if you live in China where it's super, super competitive. And so I just think, I mean, that's a whole different topic,
There's a unique situation in China that we might have time to come back to. I want to push back a little bit. Tesla's claiming there are about 10,000 S and X stuck on boats. at the end of the quarter, and that also created opportunity in Q1 of 2019 when they first started shipping to Europe. I think is the Model 3, and there were 10,000 stuck on boats. So I think deliveries are growing a little more than 35%. And I think there's two advantages that Tesla's trying to build with this inventory growth. The growth in inventory is, one, they're trying to lower costs. That's not one of the ones I want to talk about, but there's a section of buyers that likes to buy a car right now. And if there's not a car on the lot that they want, then they look elsewhere. They just been trained that way. It's how they've been doing their whole life. So it's possible Tesla may want more cars on lots. And I think another thing is, previous to this, Tesla has sold like all their cars that are at a Tesla center, and they don't even have a car that someone can look at or test drive, for multiple weeks after the end of a quarter. They just sell every car no matter what, but now they're going to have cars that people can test drive. And that may go to the awareness piece that we want Tesla to build with the public. What do you think about those items?
I think that's hogwash, Brad, respectfully. So 10,000 Model S and X on ships. There's always cars on ships at the end of the quarter. So, if you're going to do it fairly, you got to say, okay, 10,000 this quarter, and how many were on it last quarter, and take the delta. Okay, so that's the first point. And they always talk about that they have cars in transit. In fact, Zach said it last night. He said, this is the third quarter we've been trying to smooth the delivery wave. I mean, how long does it take to smooth the delivery wave? So I get that you can produce more than you sell for a couple quarters, but at some point you got to stop it, because the days of inventory outstanding, now they're 15, they were 3. Okay, it was a 3 couple quarters ago, now it's 15. At some point that's got to stop. So I'm not going to give management that latitude of saying, okay, there was cars on ships. There's always cars on ships at the end of the quarter. There always is, right? They don't always quantify it.
Yeah.
So that's point number one. I guess, I don't know. I find when management starts making excuses like that, people do tune out. I guess that would be my bottom line on this. Just execute, deliver, and if you miss, tell people why you missed. What was the other thing that you said about the reason why the inventory?
Yeah, get more cars available now to unlock a section of buyers.
Have you been to a Tesla showroom,
drives,
a Tesla store, and not seen cars there? I've never seen that. I have one that I walk past every night. It's on Rush Street in Chicago. As I go down to the restaurant row here, there's always at least 4 or 5 cars in there. Sometimes there's not a Model X in there or Model S, but there's always a Model Y and there's always a Model 3. So I'm not buying that that's a reason why, they're not meeting demand, because people couldn't take a Tesla. And look, people have always known with Teslas that it takes 3 to 6 months to get it delivered. Now it's 1 to 2 weeks. Okay, much better than it was. And I don't know if that's a good thing or a bad thing. I think it's probably a bad thing, because you could walk in and get a car within 1 or 2 weeks, where it used to be a scarcity factor that you knew it took 3 months. So you better buy one now because it's going to take a while. Right. So I don't know. I don't find that persuasive as a reason why the volumes didn't grow that much. I'm sorry.
If I go high level, I think there are a number of buyers who don't want to wait 3 to 6 months.
But that's always been true, right? So why did they do so well in 2021 when the wait was 3 to 6 months?
Yeah.
I'm asking you, why did they do so well?
I think they were working through, early adopters or people who are more open-minded or aware. I think that's why they got away with it back then.
Maybe. Look, I don't mind them producing more than they deliver a little bit, but if production keeps exceeding deliveries by 20, 30,000 every quarter, then you're going to keep having this discounting problem.
Yeah.
When Elon says we're trying to drive affordability and that's we're taking prices down, I just shake my head. I say that's not what is going on. What's going on is you got too much, because you can see it every time the inventory starts moving up, and there are people who track inventory off the websites, and the inventories are like almost as high as they were in early January before they cut price. Troy Teslite does a great job tracking order backlog in days and the wait time. those are
Yeah.
below where they were in January, you know there's going to be price cuts. It's happened every time. And
Yeah.
Elon as much said it last night on the call. He said, hey, look, we look at the orders every day, you know. Remember he said that last night on the conference call? Every day we're
Yeah.
looking at the orders. Well, you know that's what's driving the way they price. And I don't buy that it's about affordability. When you're taking the price of a Model Y down from 54.9 to 52.9, now to 49.9, is that really driving affordability with the type of person buying a Model Y? People like you, people like me, I own a Model Y Performance, right? Is that really going to drive affordability? No. All right. Where affordability and elasticity really become important is down at that $25,000, $30,000 level. So if you bring out a car like that, where you're leveraging the Tesla name, because young people want a Tesla, and if you could make it comparable in cost to a Toyota Camry, you know, with operating costs more like a Toyota Corolla, and you throw $7,500 credit on it, now you're talking, and that would get me excited if I'm a Wall Street investor. The problem is they're so far delayed on this. They should have been working on this the last 2 years, and now we're hearing, okay, we got this. Here's a question for you. We got this Mexico plant that'll be ready mid 2024, let's call it June of 2024. Why not get this product out in China where you need it today? Why not do that in China? China opened up a whole factory in 9 months. Why
Yeah.
not, you know, get space near Shanghai, or, you know, maybe adjacent to Shanghai, and get this thing up and running now so that you can get this product at least out in China? Why not do that? I'm asking you. I don't understand that. Why do you have to wait for this Mexico plant?
Yeah, I don't know. I think there's a little limited resources and the human capital at the highest level in Tesla.
Hire more people.
Yeah. Yeah, I wonder at a certain point, I wonder if China tried to extract too much money out of Tesla at a land sale. There was this land sale that was going to happen next to the factory there. And I think China was like, well, you know, this Shanghai factory is so successful, this next piece of land is $1 billion. And I think what happened was, I think Tesla balked at that.
Yeah.
So there might be a negotiation that's going on. So that's my hope, but you know, we'll see what happens. Again, Gary and I are along the stock. We're overweight the stock. We're believers in this long term. We're just talking about, you know, how we're feeling, how we're thinking about things based off of the report and the earnings call. I'll tell you a couple of things that bother me about the call. Is that you know, as communicated to us earlier, I don't know if it's 3 months earlier or 6 months or whatever, that Tesla is not battery constrained in any portion of its business. But then we hear last night that Lathrop, I did that stakeout on Lathrop.
That was good research. I loved it.
Thanks. That Lathrop, the thing is holding it back is batteries, and maybe batteries is the part that goes in that last step, which is holding things back, or maybe it's the power electronics or the inverters that are holding back that last step right before it goes out the bay door. But I was a little disappointed that they said batteries are limiting for them after they previously told us
no constraints, no battery.
Yeah, no constraint. But you know, I think where maybe I went wrong is everything has a ramp. The suppliers have a ramp. Tesla has a ramp. Even if it seems like a simple product and you're just dropping in batteries to a big box, you know what it seems like, there's still a ramp to that.
Were you disappointed by the 4 gigawatt hours of energy deployment? The number that they produced last night, I think it was 4, where the capacity is 10 per quarter. Were you disappointed by that number?
Well, it's grown from about 2.
2, right? So it's doubled. And it beat the street.
Yeah, so I'm just wondering when these Lathrop mega packs are going to get recognized. I'm wondering what kind of inventory number we see in the 10Q. So you started breaking out the energy division inventory, which isn't 100% mega pack, but you know, that may be helpful. So I'm guessing that's grown, which means there's mega packs out there they haven't recognized yet. They haven't been energized to the grid, connected to the grid, and you know, gotten the final, you know, thumbs up on revenue and profit recognition. I'm hopeful that comes. I slightly disappointed that they said, well, the target is 25% margin on
Right.
Mega
What
Pack
EVs make.
2XL long term.
Yeah.
So maybe they're just being conservative about how they plan for product, but from our research, like these Mega Pack 2XL, could be above 40%, 50% for some time before it, eventually comes down. There certainly is competition there.
Right. I was going to say there is competition.
Yeah.
It's hard to get 40% margins when you got big manufacturers out there.
And it's not just these smaller players in the US. BYD has its own big battery business. CATL does, LG, and they're the ones providing the batteries to Tesla.
Yeah.
The other thing that was strange is they said we're locked into long-term lithium contracts,
Which they've said before. That wasn't.
But if they were locked in, why were they harmed by the increase, the spiking in lithium, over the past 6 months? If they were locked in, that really shouldn't have harmed them that much.
They would
What
have
do
been
you think
harmed
about that,
more.
Gary?
I think they would have been harmed more. And I remember last year, somebody was asking about that as lithium was spiking. And he talked about being on long-term contracts. And look, what most manufacturers do is they price partly to the spot, right? So because that the contracts at some point are going to reflect whatever the spot price is. So you've got to build that into your pricing equation. So I think they probably would have been harmed more if they didn't have contracts when it was going up and they didn't benefit as much. And look, I believe that as you get into second half, the fact that lithium has come down so much will cause their prices to come down, their costs to come down. But you didn't see that last night. Costs really didn't come down much at all. And I think that was disappointing to people.
Yeah, I was a little disappointed how much Mega Pack was recognized. So we'll see what happens in future quarters. I've said in my video, I think it's got to happen by like Q3 or Q4, where a bunch of Mega Pack gets recognized financially. But we'll just see.
How long do you think it takes to get the Shanghai Mega Pack factory up and running? Because that's a big catalyst if it can happen quick.
Yeah, it should be fast, and
like
Tesla knows what equipment they need. If they actually need more equipment in Lathrop, they know to double order that. And I think they'll be more aggressive about scaling the power electronics and the batteries.
Right.
So I gotta think it would happen much faster. And when you combine it, the reason why I'm excited about it is if you combine Lathrop and Shanghai 40 gigawatt hours each, potentially that's 80 cents in earnings if you're at a 40% margin, just because of how the pricing is versus the cost right now. And that's essentially almost what Tesla's doing right now, 80 cents a quarter, what I should say. So that's
use a 25 margin.
25. So that's why we're excited. Wall Street, and the profits from that would be above 10 billion. Yeah, I'm higher than Gary. We don't have to debate this part right now because I do want to get into other stuff. But Wall Street's only at 2 billion in profits from that division in 2025. So that's a huge I think that's a huge catalyst when it really starts to flow through to the earnings.
And I agree with that. I thought, my number was about $1.5 billion in revenue, and the profit number I used a 10% margin to be conservative. But in the out years, I'm using 20, and I have it pretty much doubling every year from a revenue standpoint. So I agree with your point. And just looking at where Wall Street is, they don't appreciate it yet. And maybe they're smarter than you and I don't know. But they don't have those type numbers in their forecast. So I've included it as a catalyst. I just don't know, to your point, when the street will put it into their numbers. The fact that they beat the street was at $1.1 billion in revenue, and it came in at $1.5 billion. You would think that some people would recognize it, but the whole gross margin on EVs way overshadows because it's such a dominant part of the business. So.
I think there's something strange with China, and we'll talk about Cybertruck next. And I don't know if this is correct. It's been communicated to me, but there's a change happening in June 30th where there's a chunk of ICE vehicles that manufacturers, predominantly maybe European and US, where they're not ready to comply with those rules. They're going to comply to the European rules, but not the Chinese rules. And what they're doing, according to what I've been told, is they're selling these cars at a 50% discount. And this started like in January. So you've seen a decline in the Chinese EV makers, where they've been declining since December. January was lower, February was lower, March was lower. Tesla hung in there, but I think there's what's called a substitution effect going on right now, where the prices are so low on these new ICE vehicles that are flooding the market before this change, that people are holding off on EVs. The big battery EVs of the Chinese makers are down substantially. And I think what this is going to do is it's not going to just end in January 30th. I think it's pulling future demand to the present, and I think there's going to be slow sales in Q3 and Q4. There'll be an effect before EV starts to take off again in China.
Because of the glut of the ICE vehicles.
Yeah. What do you think about this? I think it's partly why lithium prices have gotten punished in China, because the big battery vehicles in China are being de-emphasized right now.
Yeah. I don't know. I mean, you see the trend in China, which is definitely toward the under $20,000 in US dollars converted to yuan. And that's why BYD is putting all their efforts in that space. And so to your point, the expensive EVs are not doing well at all. And BYD, contrary to what people make, they make decent profits and they make a good quality car. So I've always thought that, that low price segment was going to continue to grow. Will that affect Tesla if they don't bring out a low cost product, which I think they will by next year? Yeah, they'll, but I hadn't heard that there are these, this inventory of ICE vehicles that are being sold at 50% off. I hadn't heard that. So that would be new information to me.
Yeah, it may not be true.
Can't believe everything we read on the internet, I guess.
So if you know more about it, drop it in the comments. Let's talk about it on Twitter. Let's crowdsource this. But I think that's
your point though, about the lower cost segment. You see that segment is exploding in China, and BYD is, the king of that segment. All their cars are, not all, but they have this very expensive sports car they had at the China Auto Show, which of course Tesla didn't go to. But all their other cars are like 20,000 below, and they're doing well, and they're making money. They're not like making negative profits. They're not making 25% gross margins, but they're making mid-teens.
Yeah.
So I do think that's something that Tesla has to be aware of. And that's why I keep going back to, why can't they produce this, we'll call it a Model 2, $25,000 next gen car? Why can't they make that in China as well as in Mexico? I don't understand that. Why we're waiting for, Mexico to do it first to get all the bugs worked out. That seems kind of weird.
Let's talk about something fun, because I know we've been, what some people may say negative or critical or just cautious. We're just trying to be pragmatic.
Gotta be real. Be real. Keep it real.
I think Cybertruck is going to cause people to reevaluate Tesla. It's a very triggering or divisive. You either love it or hate it. And it's kind of like the Model X, Falcon wing doors. I think part of the reason Tesla did that was to, gain publicity, gain people to look at things. And what I think it'll do is it may cause people to look at the company again as an investment, but mainly, even if people hate the Cybertruck, they might look at what else Tesla has going on, and they'll figure out, okay, the Model Y is less than 45,000. It's not 80,000 anymore, and people aren't aware of this. What do you think about the potential that Cybertruck could bring?
So to me, the two big catalysts for the stock, if you're thinking about, do you want to get out of it here because estimates are going down? you got two big catalysts coming in the next 12 months. You got Cybertruck, which will be, Elon saying that the handoff to the delivery team is end of third quarter. That's when the big delivery event will be. And then they start really scaling it up next year. And then you got the $25,000 vehicle. Both of those are going to increase TAM, total addressable market. If you go back to that chart they showed at Investor Day, where they showed all the pictures and the different segments, and you look at the size of the segment, nobody could really figure out the numbers till after the fact. They put size of the segment in it. The TAM on that, we'll call it the under $30,000 segment. So is that with the car that was covered?
Yeah.
That was about 48% when you take that number, divide it by the other number, the sum of the other numbers. And the pickup segment is about 20%, right? So you got a huge TAM increase coming because of Cybertruck, whether you like it or
pickup and
not.
van,
And the $30,000, $25,000 to $30,000 vehicle, which, by the way, it doesn't have to be just a compact. It could be a cheap SUV, a baby SUV. It could be, as you said, it could be a hatchback. It could be a sedan. It could be anything that's using this next generation manufacturing process to cut costs in half. That's kind of the next leg of this. So the Cybertruck, to me, it's my favorite of all the vehicles. I think it's very distinct look, and whether you like it or not, it will drive people into the store, or it'll drive people to the website. They'll see it, they'll say, wow, that's really cool. What is it? They'll recognize the Tesla logo on the back, and they'll go on the website and they'll look at it, whether or not they're going to buy it or not. I would hope that at some point Tesla has a conventional pickup, but I think this was important to get this one out there first because it gets people's attention. And I think you could sell 1 million of these a year. And my partner and I were talking about my forecast for next year, and my volume number is pretty high because I've got both the Cybertruck hitting and I've got some number of Model 2s hitting later in the year. And that could really, to your point, move the stock, because you're going to have volume growth probably in excess of the kind of 35% number that people are gravitating to this year. And to your point, if you've got Model Y and Model 3 priced appropriately, or at least competitively, you could have a really super year next year if you've got both of those coming out. So I'm very excited about it. I think it's a huge catalyst. I think once it's out there, again, whether you like it or not, it'll drive people to the Tesla store, it'll drive people to the Tesla website, and maybe they'll buy something else.
Yeah. Yep.
It's an attention getter, and I can't wait to get mine. I've got a tri-motor. I don't know what it's going to be priced at, but I've got a tri-motor, and I can't wait to drive it through Chicago and park it at the valet, and let people want to take pictures of the damn thing. I mean, that's the way it's going to be.
Yeah, I have a brick and mortar office here, and I'm tempted to park it in front of not even in the parking lot that's in the back. I'm tempted to park it in the front and just see if I can clear it with the
Put a camera in there on the outside and just watch it. You'll see all these people coming up and take selfies of themselves, because it'll be the hot thing, and that's going to be good for Tesla to be the hot thing for.
With my app, I can look at the camera and I can have it make fart noises or whatever.
Do whatever you want. I just think it's going to be fabulous. And look, I was trying to think of what would make the stock start moving, because it's stuck here at 165-ish. So it's Cybertruck, it's getting the $25,000 vehicle out quicker, maybe making it in China, we'll call it that. It's Elon saying we're not going to take any more price cuts, which he said the opposite last night, but that would be helpful. If they started advertising or hired like a CMO, a high profile CMO, I think that'd be helpful. If they hired a Twitter CEO, which is what I heard down in Florida, the single best way to get advertisers back on Twitter is to get a CEO, because it's not that they don't like Elon, he just doesn't believe in advertising, right? So that's an inconsistency. And then the last is a buyback. And I put buyback last because it's kind of like icing on the cake for me. Buyback, they're not going to do enough that's going to move the needle, but symbolically, at least you're putting a floor on the stock that when it's getting hammered, like on a day like today, the company could be in buying back its stock. So I think those 5 or 6 things could make the stock do better than what you've seen over the last couple months.
So we're converted value guys, but I do want to talk about future fund before that. I'm curious about the strategy going forward with future fund.
Yep. So we have the long only product, and look, what we think differentiates us. We're high conviction. We're about 30 names. We do deep research, like yourself. I love the idea that you went out, got on a plane, and sat outside the mega plant in Lathrop for a week and just counted, mega packs as they left. That's something I would do. I used to, when I was an analyst, I would do mock juries. I was covering tobacco stocks, and I'd put people in the jury room and sample them. And I say, they're going to lose or they're going to win. I mean, that's right up my alley. So we like doing that type of what I'll call deep research. We're fundamentalists at heart. Dave and I have worked together for, I don't know, 20 years together. And we've got 60 years combined experience between us. And we're very disciplined about valuation. Unlike ARC, 90% of our companies make money. They make profits. And in this environment, you want a company that makes profits. So we think we've got the right strategy. We had not so great performance last year as the Fed started raising rates. We were third quartile. This year we've been first quartile. Because our Tesla position was so big, it tended to drive what our performance was. So when Tesla was going up so quickly, it put us up to like near the top. And now that it's kind of fallen back, we're kind of like middle of the first quartile. But we think that's a great product over time. We just got to do a better job marketing. What I'm most excited about is the long short product. It's going to have the ticker FFLS, the Future Fund Long Short. It'll be traded on the New York Stock Exchange like FFND. We're hoping to get it launched by, let's call it June 1st. We've got a list of shorts, and our shorts have worked. You've seen me publish my shorts on Twitter. I'd say almost every one of them is down 70 to 80% since we started posting. The one exception, which is one I know you were interested in, was Amazon. And Amazon hasn't worked. I think our thesis on Amazon was just that as Walmart, Target, and all the food stores all started doing same day delivery, people won't do it as much with Amazon. It's just the competition's gotten better. And I don't know if that's gonna happen, but I have seen Amazon revenue estimates come straight down. It's down to like 6-7% revenue growth, and people are hoping for a turnaround. But my point is, I think we're really good at shorts, and we're very excited about that product. And we'll have it for non-accredited investors in the form of the ETF. We'll have it for accredited investors in the form of a hedge fund. If you want to put $250,000 minimum in, you'll get it at a decent fee, and it'll have a little bit more leverage. I'll have 2 times leverage. With an ETF, the most leverage you can put on a long short is 1.33. But we're hoping to get both those products up and running by June. And we're working on the shorts. And look, the hardest thing, as you know, Brad, with shorts is they work, the exposure goes to zero, right? Like Weight Watchers, to me, we were talking about that before, is a great.
That's the one where we disagree. Technically, I'm not long Amazon. But,
well, but Weight Watchers to me is a good short because now people are banking on the fact that this firm they bought will convince people to pay $99 a month to be pitched, Wegovy or Mounjaro, and then on top of that, they'll pay $800 for the drug if their insurance doesn't pay for it. To me, that's not a Weight Watchers demographic. It's just not. They spend $20 a month for the online version, and to me, their subscriber growth continues to go towards zero, and go negative, and so. We like it as a short, but it's, in the last couple of weeks since they announced this deal with this company they bought that's going to recommend weight loss drugs, they call it clinical memberships, which we don't know if people can actually pay $99 a month to be advised by a teledoc, by a physician or a healthcare professional. To me, that's like a great short. My partner was big on shorting Peloton last year. We talked about it online. Stock crashed. Nikola. I've been quoted for 2 years talking about that stock was going to go close to zero, which it has. There's a lot of EV names. We would be short Lucid.
Early on, when you were picking up on Twitter, you talked about Bed Bath and Beyond, like very early. I think when it was above $10, maybe even 20.
Oh yeah, Beyond Meat was another one. It was like 90 at the time. So we've got a really good record of picking out shorts. I just hope we can get launched before they all go to like single digits in market caps of $100 million. And that's why we got to find a little bit more big cap shorts, because again, if a short works, your exposure goes down. Unlike a long, when it works, you have to trim it. But a short, you got to find a new one effectively because they're already played out. So, but that's the growth strategy. And, hopefully we'll get this thing launched within the next month or two.
Great.
But thanks for asking.
Yep.
So
well,
value, how did you go?
Yeah, we got to end it soon. We got to end it soon, but you and I are converted value guys. And one really great move you made, you do a great job of kind of anticipating how the sentiment changes or is about to change. I think one thing I do well is I I try and take advantage of sentiment when it gets too low or too high. But one move you did great before you launched the fund was you sold Tesla like above 800. This was pre 3-for-1 split. And essentially you bought it lower for the amount you paid in capital gains tax. And I think you even got it, even more than that. Can you talk about that one? Do you remember what was going on then?
Yeah, well, management wouldn't give any guidance. They just bought Bitcoin and they had just announced earnings that missed. And I just said, this doesn't sound right. The whole Bitcoin thing, people know my feelings about Bitcoin. I can't calculate a value on Bitcoin. And when they decided to take cash and buy, I can't remember the amount they bought, it struck me as not shareholder focused. And at the same time, they had promised to give some guidance and they refused to give guidance. And I was just convinced that those two things would cause institutional investors who've always had a love-hate relationship with Elon anyway, say, this is not right, and get out. So we got out. To your point, I can't remember what the price, it was like in the 8s, pre-split. And we got back in at like low 6. I remember we got back in at 620 and then back in again at 570. So we doubled up. So, the value discipline helps. It helps to buy low, sell high. Can't always get it right, but we try to do that with growth investing. And so, with something like Tesla, we trimmed our position yesterday at 180-ish before earnings. Will we buy it back? Maybe if it keeps going down, maybe it gets back to 150, we will. But I think I'm comfortable with it at 6% because I do think the next 6 months are going to be, you got to show me again, right?
Yeah, prove it.
They've lost a lot of credibility, and people don't want to admit it. But when you tell people you're going to do 20% and then you deliver 19, and in a conference call, you're basically guiding to like 16, 17 or whatever, we don't know. We just know we're going to go to, lower. You just lose credibility. And then we talked about the other things, when you say 50% volume growth, but people know it's not 50%.
Yeah, let's not relitigate this. Yeah. So I want to wrap it up here. It's Gary Black with Future Fund, FFND, looking to launch FFLS long short soon. Gary is, I think, an important voice in the Tesla community. I don't think we should ever get too far on the hopium. I think we should understand how people view this, understand the risks. Gary and I are financial advisors. We have to talk about the risks. We're forced by compliance to be balanced in what we communicate. So we can't just communicate all the upside catalysts. We got to also communicate downside catalysts.
You get in trouble if we don't.
Yeah. I'm Bradford Ferguson. Rebellionaire is a brand of Halter Ferguson Financial. And it's been good talking to you. And bye for now.
Thanks, Brad.
Yep.
See ya.
See ya.